All right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk to you about Iris Energy, stock ticker IREN. They are a Bitcoin miner. They put out their November operational report, and I want to go through that, and I want to go through a few other things going on with this company. I think the market is misunderstanding this company a little bit, so I want to give you my take on it and go through the facts. So we talk about Bitcoin and Bitcoin miners all the time on this channel, so if you're new here or if you have not yet subscribed, please subscribe to the channel and hit the notification bell. Also, if you could smash the like button, it really helps the channel out a lot, and I appreciate it. Lastly, you can help the channel by becoming a member. You can hit the join button on the YouTube page. It's right next to the subscribe button, and if you don't see a join button, there should be a link below. So members get some members-only content. We also do a once-a-week members-only live stream. In addition to that, the members get to pick a stock each week for me to do a deep dive on. So we appreciate you joining us. We have a nice group going. Okay, Iris Energy. So let's take a quick look at where they're at right now. So we're early in the trading day on December 14th. They're trading at $1.39 right now. That puts them at about a $76 million market cap. So you can see this company's market cap actually peaked in March of 2022. So that was earlier this year. This was a $940 million company. So it's gone from $940 million in March down to $76 million in December. So obviously all the Bitcoin miners have been beaten up substantially, but that is a massive, massive reduction in market cap. So I like to show the market cap because it's not just stock dilution. I think there's some opportunity here. Again, this is not financial advice. I'm just going to show you what I'm looking at and tell you what I think about it. This company had been increasing their exahash rate dramatically all year this year, so therefore they've been increasing the number of Bitcoin they mined all year this year. However, they did have a significant amount of debt, and we will look at the balance sheet later. So they made a tactical decision. They set up their debt in a way whereby they could simply just walk away from their debt by returning all their machines as collateral. So they chose to do that. Now, it's not all the machines they had in the whole company. It was just certain machines, but it did drastically reduce their exahash rate and their output. Having said that, they were able to walk away from 100% of their loans. This was a game changer, in my opinion. I know it feels like a step backwards. A lot of people are very frustrated with this. In fact, there's a class action lawsuit that I'll touch on briefly. I'm not an attorney, so I'm not going to give you my opinion on that. But people are angry that they did this. However, I really think this makes them a much, much, much stronger company. I've been looking at them all year and shying away because of that debt that they had on their balance sheet. You know, Bitcoin has gone into a crypto winter. So since they IPO'd about a year ago, circumstances have changed drastically. Bitcoin's down 75% off of its highs. The network hash rate and difficulty level is up. The price of energy has gone up. So all three of the main variables in the Bitcoin mining industry have all changed for the worse by far. So the fact that they left the door open in the beginning and negotiated their debt in a way that it was non-recourse towards the rest of the company, I think is very impressive. So, you know, the optics of it may not look good, giving back machines and walking away from them. But the reality is, when they put out their next balance sheet, it is going to look much, much healthier. Basically, what they just were able to do was give back all the machines that they paid an overinflated price for, and now over time they'll buy those machines for probably some, pennies on the dollar, maybe 15 or 20 cents on the dollar from what they initially paid for those machines. And this does not affect their infrastructure at all. So this is also an infrastructure company. So they continue to build out their infrastructure. It's just a significant amount of machines that they return. So if they can replace those machines over time with much, much more affordable, cheaper machines, and they'll also, in fact, be newer and better machines. The stock's taken a gigantic hit since they did this. I know the market didn't necessarily like this. Okay, so let's get to the update. First, they give some key metrics. Average operational hash rate was 1.445 exahash, so that is down dramatically. So the Bitcoin mined was 151 Bitcoin in the month of November. So if I go back to October, you're going to see their average operational hash rate was 3.9. So they were almost at 4 exahash, and now they're down a little bit under 1.5 exahash. So that does feel like a big step backwards. However, all the infrastructure they built out for all of that exahash rate still exists. It's still theirs, and they're still continuing to add infrastructure. What they've lost is the machines that were generating the Bitcoin. These machines were not paying for themselves. The decision from a management standpoint was that simple. Okay, so obviously their mining revenue went way down. Their electricity cost went way down in total, but per Bitcoin, we're going to see it went up a little bit. It was 12,581. These are in US dollars. Last month, it was $9,304 per Bitcoin. So that went up quite a bit, but you're also going to see an adjusted number, 10,168. Some of this energy is a one-off event because they had to scale down and turn off a lot of what they did. There were additional fees and that kind of stuff related to that. So they've adjusted that down to as if they were conducting business as usual, and that's around 10,168. So that's a really good cost. That is among the lower costs per Bitcoin for energy among all the Bitcoin miners. So that's a healthy number. Their revenue per Bitcoin was about 18,900. So, that was just simply based on the price of Bitcoin. There's nothing they can do about that. Okay, this is what I really want to go through. So this was from their corporate update. On December 6th, the company provided an investor update. Everything changes, everything remains the same in respect to its positioning, going forward opportunities, and strategic priorities. Okay, bullet point 1, risk-focused approach positions the company to weather the storm and capitalize on the next bull run. So they sell all their Bitcoin anyway, by the way. So it's not like this is a company that hodls. So if you're selling all your Bitcoin every month and it's not paying for your debt, there's absolutely no point in mining that Bitcoin. Okay, liquidity as of month end, $47 million in cash and no debt. So that's a very strong position versus where they were. $21 million estimated net CapEx spend to achieve 180 megawatts. So they need to spend another $21 million to finish out building their infrastructure for 180 megawatts of capacity. So that is obviously much more than they're using right now. So they have the ability to scale way up. $75 million remaining on Bitmain prepayments. So they actually are going to get a lot of machines without spending any more cash. That $75 million has already been paid to Bitmain. They're in the process of coming to an agreement on how to deliver those and how to apply those prepayments against machines. That's going to get them a massive amount of machines at the current price per terahash versus what they paid for and just gave back at the old price. And then $100 million unutilized under B. Riley equity facility. So they have an at-the-market offering. They haven't used any of it yet, apparently, is what they're saying based on this update, which was as of yesterday, the 13th. Significant opportunity from 180 megawatt real assets platform, e.g. self-mining or hosting. They want to focus on expanding self-mining capacity to 5.4 exahash. So they were at 3.9 exahash. They've had to take a big step backwards to about 1.145, but they have the infrastructure already in place. So they're looking to get back to 5.4 exahash of self-mined capacity. So that would get them right back on target to what they had talked about, in the middle of this year. Potential additional expansion from 200 megawatts to 600 megawatts at Childress. So they do have the option to continue to build out. Okay, very briefly, I just want to bring up, because I think it's important to disclose this, crypto miner Iris Energy hit by class action lawsuit. This was an article put out by CoinDesk, so I'm just going to read you their highlight. There's just really one thing in here that's the heart of the suit. The suit alleges that Iris Energy has repeatedly given out material, false information, and misled investors, starting with the documentation for the firm's 2021 initial public offering. Those documents were negligently prepared and failed to disclose certain of the mining machines, quote, owned through its non-recourse SVP, non-recourse special purpose vehicles, were unlikely to produce sufficient cash flow to service their respective debt financing obligations. So that is the heart of the matter. That's what they've now said, is these machines cannot provide the cash flow to service their debt. Well, obviously, that is because Bitcoin went from $69,000 down to $17,000. Now, in my opinion, the company left themselves a back door to get out of all this and save themselves in that instance. However, I am not an attorney, so I have absolutely no idea whether or not this lawsuit is going to be successful or not. Just because it doesn't make sense to me doesn't mean it's not going to go somewhere. So this is out there. I don't know what the ramifications of that are, but I just wanted to make everybody aware of it. Okay, so if we go to their June 30th balance sheet, you're going to see they had current assets of $160 million, total assets of $570 million. Now, $247 million of that was property, plant, and equipment. So remember, they returned a couple of exahash worth of machines. So this number will go down. But here's the other side of the equation. Current liabilities were $85 million, and non-current liabilities were about $48 million, for a total of $133 million of liabilities. So that's about $108 million of debt. That debt is now gone. That is now zero. So on their next financial statements, their borrowings are going to be zero. Their current liabilities are going to go down dramatically. They told you what their assets were, so their current ratio is going to go up dramatically. Their liquidity is going to go up dramatically. and cash is king at this point in a down market. So positioning yourself to have the liquidity to get to the other end of the bear market is what we've been talking about on this channel for months and months and months. So to me, this was a giant step in that direction. They just shed $108 million of debt. That's almost all of their liabilities. Okay, so this is the company's chart since inception. This is on the 1 week time frame. So essentially they IPO'd in the middle of November. So that was actually simultaneous with the peak of Bitcoin. You can see they're down from their 52-week high. So that's actually right in line with most of the Bitcoin companies. Believe it or not, all of the Bitcoin companies are down more than 90%. So as shocking as this number is, it's actually somewhat in line with the rest of their peers. However, I want to look at a closer look at what's happened to them recently. So you can see they're down almost 80% in the last 4 months. So this is the period of time I think there's been an overreaction to this stock. They hit an all-time low in June of 2022 when Bitcoin flash crashed. They took out that low on November 9th and set a new all-time low, and they have now subsequently gone well below that. A lot of this had to do with what we're talking about and the restructuring that they did. So they took a big hit for this. So from their initial lows from this summer when Bitcoin hit its 52-week low, and that was a flash crash down to around 17.7. Today we are back up over that, a little over 18,000 at the moment. However, Iris Energy is down about 52%. So you can see this stock has been taken out drastically from what was its all-time low. I'm looking at the risk reward on this. I like this company. I have not bought any of this company yet, but to me, I like the risk reward analysis on this. I think this is going under the radar. This stock keeps getting beaten down, and I think people are not looking at the long-term picture of what they did and how they restructured, and that they are now, in my opinion, a much stronger and more healthy company and much more able to sustain whatever this bear market brings. That's what's going on with Iris Energy. As always, the Bitcoin mining stocks are extremely, extremely volatile, so please be careful trading, and thanks so much for watching, and we will see you again in the next video.